This is ForexOverviews.com with the short-term analysis of Euro-Dollar Forex pair. This is a daily chart of Euro-Dollar, and we can see that market has break above these two lines. The one in black is the upper border of the symmetrical triangle, and this one in red is a downtrending line that can be better seen on the weekly time frame. And we see how the market break it above these two and retested the lower one, break it above again, and now retest the downtrend line of the weekly time frame and started to move up again. Now the market is fighting against this area of classical technical analysis support and resistance, the area between 133 and 50, 134 and 134 and 50, this 100 pips area, and market on the daily time frame confirmed the breakout by retesting this line and started to move up again. Although on the weekly time frame this breakout doesn't seem very good, with a longer upper shadow of this candlestick, but still it is a breakout. This line is breaking. Now we need some more bars on the weekly time frame to see if this breakout on the weekly time frame will be a true breakout. But on the daily time frame this breakout looks nice. You can see here the strong bar to the upside, retest and continuation up again, right? We can also see here that market has been moving in upward channel, as I'm drawing right here now, right? So this is an upward channel, although it's not that good because price action is slightly slow, it's a bit choppy here, but still market is trending inside of this channel. We will see better it on the 4-hour time frame. Okay, and take a note also that all of this upward move has been backed up by the standard MAs, and especially by the 20 period moving average, this one in blue. And take a look that market has made this up move above this MA, has tested it one time, renewed the highs here, tested it by the second time, started to move up again. So the market being above this 20 period MA is a sign of bull power on the market, signs that the bulls are having a nice power to push higher the market. And also this up move has been backed up also by the price action framework MAs. See how the market is being rotating on this dynamic area of support, and on the Thursday bar market make it this nice pin bar one and showed a signal to go long by the breakout of this bar, or even by this retracement. So a market is pointing here upward move by the price action framework. We can also see by the Jojo-Napoli framework that this move is also backed up by the 25/5 MA and by the 7/5, the longer term and the medium term MAs of the Jojo-Napoli framework, and market is standing above of these two, supporting this up move. All right. And although we have the signs of bull power on the market, we also have some threats for the bulls. And here on the Jojo-Napoli framework we can see that we have a bearish divergence on the MACD indicator. We can see that while price is forming higher highs and higher lows, the MACD indicator is showing flat tops or even slightly lower highs. Okay, you can see this line is slightly inclined to the downside. All right, so this is bearish divergence, warning sign for the bulls. And also on the Jojo-Napoli framework we can see that the market has made this stop grabber pattern here, tried to shift the trend to bullish and close the day below the red line, the MACD predictor. So this is a stop grabber pattern, and this pattern suggests the taking out of the previous lows, this one here. Okay, so this is some threat for the bulls, and maybe with this divergence this could be a pattern that can trigger the downward move, at least some deeper retracement. Okay, you can also see here the three drives pattern: the first drive, the second drive, and this point here is the intersection of the 1618 extension of this first drive and the 127 extension of this second drive. So we must pay attention that we have warning signs for the bulls pointing that some retracement can come. Okay. Also, as another threat for the bulls, we have here an untouched monthly pivot point, this line in blue, and in most cases the market goes for the test of the pivot points. So market, by these divergence and the signs on the daily time frame, can make some downward movement, some fast acceleration to the downside, and maybe can touch the monthly pivot point. So this is a warning sign for the bulls too. Now on the 4-hour time frame, we can see that same channel that we have talked on the daily time frame. We can see that here it's a much better looking upward channel. See how the stops are well connected, and also these bottoms here. And I must call your attention that this upward channel was preceded by some fast and strong upward acceleration. Okay, so if this channel would be breaking to the upside, it will suggest the same move also to the upside, the same nature of this move, this strong upward continuation. Okay, so we must pay attention on how price will develop inside of this channel. We can also see here that we have potential head and shoulders pattern here. Okay, but by the hourly time frame we can see that maybe it will not work, because take a look how market has made this ABCD here, ABCD. This CD leg is much more faster than this AV1, and by just single candle market has reached the 100% extension, and it suggests that market can continue to the 127 extension or even to the 1618. Also take a look that the 1618 is above the stops, so market can continue to move upward inside the channel of the 4-hour time frame, renewing these hikes. All right, so here on the hourly time frame we can see that the market will face some nice and strong areas of support. On Monday it's testing this first 38 Fibonacci support on Friday, and maybe the market can make some ABCD and reach the confluence area, the K area of confluence of Fibonacci support. And take a look that also the daily pivot support one for Monday is exact on this zone, on the 133 and 40. Let's see it here. Alright, daily pivot support 1 and 133 and 40. Okay, and the confluence support on the hourly chart will be at 133 and 60. So this will be a strong level for the market, so it can make another bounce and reach these extensions. Okay. Also, we can see here that the trend is bullish by the MACD indicator on the George Napoli framework, and that the market is being backed up by the 25/5 displaced MA of the George Napoli framework, signaling that the market can make some support on this longer term MA and reach the higher extensions of this ABCD. Also, market is being very well backed up by the price action framework on the hourly time frame. Take a look how this move has been made. Okay, a nice move to the upside by these MAs, and on this past Thursday market has made this nice signal to go long, so it could be used to go long at the breakout of this bar. And also on Friday it has signaled also the spin bar, a signal to go long, and you could have been with your stop at the break even already. So this framework also backs up the up move and shows the bull power of the market on the hourly time frame. Still on the hourly time frame, the standard MAs are mostly all of them showing the bullish configuration, and most importantly, market has broken above the 100 period MA, so the market can have the power to continue the move upward. Now, if the market will not have the power to continue to the higher extensions of this ABCD, and if the market will break below the zone of 133.60 and 133.40 on the hourly time frame, we must pay attention on the 4-hour time frame. Let's switch back to the 4-hour time frame and see this framework, which in my opinion is the most important of the analysis. We can see here that we have two zones of confluence support, two K zones, alright, and the first one coincides with the weekly pivot support one, as we can see here. The line in green is the weekly pivot support one at 133.01, okay, right at the confluence support zone. And take a look also that the same zone will be the lower border of this upward channel that we have talked about previously. Alright, so this is very strong area of support for the market, in a way that we can accept the retracement up until the zone, right? If the market will break below the zone, it will be not a good sign for the bulls. It will signal the loss of momentum on euro-dollar. Although this is the market and anything can happen, for instance, the market can make a false breakout of this channel and can reach the second zone of confluence support and return right back inside of it. But that's something that we don't want to see. We don't want to see the breakout below the zone of the 133 even for this healthy uptrend stay in charge. Also take a look that market has completed this ABCD pattern here to the 100% extension and has made the 618 retracement, which is quite normal after the completion point of 100% extension, and has started move to the upside again. So maybe the market will have the power to proceed to the upside. So this is the most important level to watch for the next week. Also take a look that this first zone of confluence support has already been tested up one time and market started the move up. So maybe this is the test and the upward continuation after the 618 retracement of this ABCD. I would also like to call your attention to show you that on the previous week we have talked about this level, that it would be the most important level for the market on the previous week, and in fact market has tested the zone and was held here and started the upward move exactly from the zone. Okay, so as a conclusion for the analysis, I can say that the market looks bullish for me. We have many signs pointing the bull power, pointing the upward continuation, but we have some worrying signs for the bulls on the daily time frame, as the bearish divergence on the MACD indicator, the completion of the 3 drives, the stop grabber on the Jojo-Napoli framework, and also the untouched monthly pivot point. But in my opinion, as long as the market stands inside of this upward channel or even above it, we have no worries for the bulls. While the market stands here on this channel, this will signal a healthy uptrend for the bulls. And the most important level to watch for on the next days and next week will be the 133.00, the 133 even. And if the market will break below this level, it will not be a good sign for the bulls. It will put this upward trend into question. That's it. Thanks for watching.